Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 23rd of January. All right, now we're coming into Tuesday. It's not a big day of trading, to be honest. We've got, if I just check out the calendar here, just using trading economics, the big trade days are definitely Wednesday, right? Probably the North American session where it kicks off for the week. We've got the Bank of Canada, then you roll into Thursday. We've got some European data, obviously the ECB interest rate decision, a key part. Some key US numbers, and that's followed by, we got the ECB press conference, but Friday, the PCE price index and some US personal income and personal spending numbers. So Tuesday, right? What can you expect? Well, just focusing on where sort of the action is and where the data sort of takes us. We already had some Aussie data out. No big deal. No business confidence numbers, slightly better than what I expected. But the data in Australia and New Zealand is really banking up to be a dire situation. Now, just keep an eye on things as we go through the day. You got Canadian housing numbers. Now, none of these are really dramatically going to impact the value of the currencies, except for down here, you've got the Kiwi inflation rate, right? Quarter on quarter, year on year. So this is going to be very important, obviously, for the next move in the Kiwi. And I'll show you the charts here in a second. It is pretty much on its knees. Right. So the forecast, just before I go to the charts, the expectations, right? 0.5 quarter on quarter, 4.7 year on year. And the range here, very important, right? That's what the market will be looking for, an extended move outside those ranges, right? So that's just keep an eye on those as we go forward. Now, let's just have a look at what's going on here on the machines, on the charts. Right, globally, you would expect everything to be pretty much on hold as from yesterday, and it pretty much is, right? Nothing's really moving. Aussie and Kiwi, if anything, the data that's coming out across the banks, and the banks collect all the credit card details, all this sort of stuff. Apparently, since Black Friday, November, spending has shriveled up, right? And these two economies are much smaller than the European UK economies and under the pump. I expect these two to fall a lot more dramatically because the pressure will be on the central banks, even though they aren't talking yet. They will wait till it comes up. Dollar Swiss just hanging around those levels, dollar yen cruising topside, and dollar CAD, right? Nothing's happening against the dollar. But what I expect going forward is, especially with instruments like the Aussie and Kiwi, where we're seeing like the numbers tumble, we're going to see a lot more cross-trading activity. Now, since we've got the Kiwi CPI data, it makes sense to keep an eye on what's happening on the Kiwi. Now, this is where I like it. FX polls, this is probably going back to early January, maybe even December. Okay, the smart money here is suggesting back up to 64. While that estimate is up there, I still think it goes down. I think it goes down to like 55, right? That's how dramatic I think I can see the numbers turning around. So that's something to, you've got to develop that sort of gut feeling, right? There's no point having a view or opinion if you don't know exactly what you're anticipating. Now, Kiwi has been going down for some time, right? It's been a bit of a dribble through mid-January, but from the start, it has actually sort of been tracking lower, and it's a bit more obvious when we look at the crosses, right? This is where I think some of the cash is going to come for the Kiwi. Right, Aussie Kiwi, it's a little bit higher. Now I expect the Aussie to not to go too far against the Aussie because the Aussie's in all sorts of trouble as well. But you can see here, Kiwi Swiss is drifting lower, Kiwi Yen down, Euro Kiwi up, Sterling Kiwi up, and Kiwi CAD down. So the weakness in the Kiwi is already there, right? So you've got to be careful what you get into. Technically, we're looking for good trading opportunities. But as you can see here, it's already moved against most instruments, right? And when you look at the Kiwi, you're thinking, yeah, well, Kiwi Yen might be a go. Well, it's a race who's the weakest currency. Obviously, the yen is winning outright at the moment. But if that corrected, we do have the Bank of Japan coming up. And I don't expect anything from that interest rate meeting, but stranger things have happened. There is a chance for Kiwi Yen, right, to really crank things up. And if I look at the Kiwi crosses on the dailies, right, you can see here, well, Aussie Kiwi, I don't think it's going to go too far. As I said, Aussie data will sort of knock it back down. Sterling Kiwi's already left the building. I think there's room for Euro Kiwi once again, we have to wait and see what the ECB do. The yen crosses across the board are all sitting targets, but you know what? It's got to go a long way down before it breaks the downside there on Kiwi yen. Now, when you are looking at potential trading opportunities, and we've got, say, the hourly charts here, this is where the data comes into play, right? The market is factoring in, well, the expectations. That's what they've factored in, 0.5 to 4.7. Quarter on quarter, 0.4 to 0.8. So if we're looking for a move here to get involved, like the trend is down, right? So fighting the trend, buying Kiwi is a short-term trade, if anything, and a little bit problematic because all the momentum is down. But what do we need to get it lower? Well, we need this thing here to move down below 0.4, right? We need it to come in dramatically weak. Is it too soon after the Christmas break where there is a lot of spending? Maybe. But that's where I think the diamond in the rough here is at the moment. Weaker numbers. So if we get a print 0.3 and also year on year below 4.5, that would be the big surprise. And Kiwi will continue to move lower against all those crosses, right? Once again, if I just shrink that calendar, you're looking for opportunities to get into this pair, and it's around where there's extra weakness, right? Kiwi yen, definitely a bit of a target. We've got the, a trend line on the downside. Kiwi Swiss, definitely worth a crack. Whereas, you know what, Euro Kiwi, Sterling Kiwi, Kiwi CAD have already left the building. Now, you can get into trades there, but you probably want to have a bit more flexible trade plan to manage any sort of liquidity issues around the time of the release. Okay, and this is, so the inflation numbers going forward, in my perspective, are going to be huge, right? And so make sure you do keep an eye on things as we go through the markets. Keep an eye on the various, if we've got a risk on profile or a risk off profile. At the moment, we've got a bit of a risk on, but we are seeing Euro being a bit of the odd one out. Now, we've got the ECB in a couple of days. There's still plenty of time for things to happen there. And don't forget, keep an eye on the yen, even though I don't expect too much to happen there. It is a moving target. So let's just keep an eye on that as we go forward. And just one thing, let me just come back to that Kiwi template, because I was looking at a couple of things there. If you're looking at, don't just look at the US bonds, like the Kiwi bond prices are up means the yields are down, right? There's pressure on the Kiwi. You can see the Kiwi against most pairs is already down. So if you just get weaker CPI numbers, then they're the prior numbers there. But we need it to be weaker than what the market is forecasting is where I'm getting back to, right? That's where the opportunities are. And whether they're short-term or long-term, it depends how variant the numbers are, right? It needs to be below the low. And as I said, a bit of seasonal activity around that holiday break where there is a lot of consumer retail spending. If the data is correct and what I've been reading, then these numbers, retail sales, etc., are going to be weak, and we might get a surprise weak print here. It might be a bit early, but that's where the money is, in my opinion. Going with the trend, which is down for the Kiwi, and then looking for the best instrument to get into. All right. And the main reason for that, sorry, just to come back to that, tied in, because if we look at the numbers coming out, we've got like a full day before we start to get into some bigger US numbers where things might, the dollar will influence the Kiwi. But Kiwi crosses, there's might be some joy there on those. They just run, right? But what you need to factor in, if you are looking at the Kiwi crosses, right, I would call a lot of these crosses exotics. Okay, Kiwi yen's pretty much mainstream. Euro Kiwi, Sterling Kiwi, Kiwi CAD. These are not exactly exotic, but they aren't. They run hard. You need a bigger trade plan, maybe a smaller trade size to get into the trades, and then let it sort of run a bit. All right. Anyway, that's my $2 worth. I think if anything, don't go looking around for some action on the majors, because nothing's going to happen until these central bank meetings and the US numbers drop. For me, it's the Kiwi. That's where you need to be focusing. Good luck, traders. All the best. Cheerio.